Welcome to Startup India Global Venture Capital Summit 2018 in Goa. In business, as in life, it's not always our abilities but our choices that define us. And very often in the life of a startup, that choice tends to be predicated by money or capital, whether we like it or not, and therefore this summit. To put things in perspective, between 2004 to now, we've had about $51 billion flow into startups in our country. In the last 4 years, we've had $38.5 billion flow in. So clearly the pace has picked up, but not nearly as enough as is required to really accelerate the pace of innovation here in India. And that will be the fulcrum and the focus of a lot of conversation that we will have here today, not just on stage, but off it as well.
When you go to the market which is completely settled, perfect regulation in place, everything is happening as predicted, the funder will never get returns that we expect.
SIDBI has committed about 1,630 crore rupees in 32 AIFs. Whatever we are investing, 8x is coming from other LPs. So this is really giving a massive boost to the domestic venture fund industry.
By touching the lives of consumers, not just in the metros, but in Tier 2 and Tier 3 cities of India, and huge investor returns have been delivered in the process.
Today, India is the fastest growing startup ecosystem in the world. We are number 3 in the world in terms of unicorns, and number 1 in the terms of new startups adding every day.
We are looking at futuristic technologies, maybe it might be AR, VR, ML, AI, data analytics, to name a few. As we take these things ahead, we have ensured that last 20 months, the policies which we have worked on are being very collaborative with the industry and the academia.
Drone as a technology will fuel in a lot of innovations, whether it is agriculture or it is infrastructure, whether it is media, entertainment, whether it's security. And by the 1st of January, at least the 2 category of drones, that is the nano drones and the micro drones, will be free to take off into the sky up to a height of 400 feet, which is very liberal.
Here is the Joint Secretary. She is telling you about the potential of the sector, and they have consulted stakeholders so many times. This is the new approach of the new India.
Earlier 2 C's were command and control system of regulation. Now current 2 C's are coordination and cooperation with the stakeholders.
So I want to begin by asking you to tell us what are some of the steps that have been proactively taken to woo global capital to India? And I'm not just talking about venture capital, I'm also talking about the sovereign wealth funds, the pension funds that actually sit on large pools of cash, and we haven't really seen much investment come via that way to India yet.
You know, we have taken a number of measures. I must have personally met almost all the top sovereign wealth funds, pension funds, other funds, all across. In fact, when we had this largest sovereign wealth fund is ADIA, Abu Dhabi Investment Authority.
Correct.
On the 16th of October, we had a very long meeting on high-level task force meeting in Mumbai, and we requested him, and they have now fruitified less than 2 months, $50 billion of a line of credit that they have offered to us in terms of SAP facility. They are committed to invest into India in a big way. One is that they have created India Desk for the first time to look into India's investment as a potential target group. Canadian pension funds, also we are talking to them regularly. I went to Australia, met super funds of Australia, and you will see the significant change. I was just talking to the Japanese. All the Japanese funds are telling me, and Japan has a very high savings rate. Their public debt to GDP ratio is one of the highest in the world, 300%. So those funds can invest, so they buy Japanese debt, the pension funds or the other funds, because they have no other choice. So I was just not telling them, I met just now the 15 of them, and I was telling them, why don't you invest in India? And they are very happy. They told me that we'll more than happily. We are taking all structural changes. For example, they were saying deregulation. They already set up a committee under the chairmanship of DIPP to remove all regulation, unless which is really necessary, like environment regulation is necessary, other security related regulation is necessary. But unproductive, unnecessary regulation will be removed. We discussed something just now very interesting. Documentation. Sometimes the bigger the documentation, the bigger the fees. So that's why we encourage more bigger documentation. We have said we'll create model documentation, which can be used by anybody and everybody, wherein Japanese and Indian lawyers will sit down together and make certain covenants which are really necessary to go into the agreement. Some can be optional, which can be picked and chosen by the parties agreeing to it. But all that will be ready.
And how much of this capital do you think will flow into the startup ecosystem in particular? And how much of it will actually go into large infrastructure projects and so on and so forth? And what is the way of targeting this pool of capital towards technology startups in particular, perhaps?
So I feel the amount of money that will flow into India over the next few years' time will be significantly higher. There's just putting number has no meaning. But I just told you $50 billion. Then another $75 billion the Japanese government has agreed with our Prime Minister. So just imagine the money is now coming in a big way into India. We'll see the change that is going to happen and sectors. So startup, this is primarily focused on startup today. But very soon I will organize something for sovereign wealth funds and other funds to bring money into infrastructure into India. Thirdly, we like to also target specific countries, like for example, Australian super pension funds. I met them in Australia. You'll be surprised within the next few days, their team flew into India as a follow-up measure. I again spent a lot of time with them. Now I'm sending them to different states, telling them, please go and look at the states. So all of this is happening at a rapid speed.
Speaking of states, we caught up with the IT as well as Labour and Employment Minister of Goa, Rohan Kaunte, to find out more about the state's startup policy. Let me begin by asking you to kind of tell us a little bit about, to your mind, what are 3-4 of the highlights of the startup policy that you've rolled out here in Goa in July earlier this year?
We are looking at futuristic technologies. Maybe it might be AR, VR, ML, AI, data analytics, and to name a few. As we take these things ahead, we have ensured that last 20 months, the policies which we have worked on have been very collaborative with the industry and the academia. So the insight of what the expectations of the industry are something that we have derived in the policy. This whole policy is being talked about because this incentives, what we do is basically focused on creating employment for the people, the locals.
Correct.
Creating opportunities for them, ensuring that a lot of them become job givers rather than job seekers. And from that standalone point of view, we have ensured that right from giving matching grants to salaries, maybe a person who's having a startup, coming into a startup, getting himself employed, a basic runaround of a salary would be 10 to 20,000 rupees for him to start with in this local culture. Here we are looking at giving a matching grant up to 10,000 rupees. To avoid the brain drain, we are talking about campus interviews wherein the companies who recruit these people can get an incentive to start with. 10,000 rupees for a male recruitment, 12,500 for women recruitment. So looking at how we can promote women, looking at women empowerment in the right direction. So whether it's reimbursement models, the startup needs basically, other than he wants to innovate, he comes up with the idea, he needs to be an entrepreneur. He needs to have these basics right. And for that, the capital cost, the capex becomes a very important part in his whole structuring. So we need to ensure that his internet cost, his power cost, his OPEX costs also are variably kept in a particular part where reimbursement models can help him.
All right, my last question is, and you spoke of capital, so I must ask you about the creation of the Goa Angel Network. And can you give us a sense of if the government will be participating in any way in terms of, co-investing or putting in a lump sum amount of money in the correct structures, of course, to kind of accelerate a local ecosystem of investment?
The policy is already defined, and if we go as per the policy, we are already talking about capital investments, supporting institutions in terms of their capital cost, in getting incubators, getting co-working spaces right. But when we come back to the Goa Angel Network, that's what has been formed recently, we have had high net worth individuals who have been in Goa, who did not have the exposure to come together and give a insight of what they needed to do. The government has collaborated with the network, got them together. And the best part is, the game changer is that these high network individuals have started supporting the startups. They are looking at them as an asset class. So when you start looking at them as assets, you automatically start giving more support. The whole system starts grooming. And I think the start has been very good, very vibrant.
While the Goa government has given legitimacy to the local angel investor group, individual angel investors continue to face issues around legitimacy of operations and IT notices. Some of these concerns around early stage investing were addressed by the markets regulator SEBI on this panel on easing regulations.
And we talked about capital wanting to come into India, reduce cost of capital and deliver returns to these global investors who all want to come into India. So in that direction, it would be lovely to hear what SEBI has been up to.
So we have set up a committee which is called the Alternative Investment Advisory Committee. Like if you talk of the startup funds investing into that, the issue was that what should be the minimum investment tenure. So that used to be 3 years, which was made to 1 year. The minimum investment, which used to be 50 lakhs, that was also reduced to 25 lakhs. And the time period within which it could be made, that time period has been increased from 3 years to 5 years. That which gives the more flexibility to the investor as well as to the fund. Similarly, the minimum corpus of the fund, that has also been reduced. These steps have been taken, and very recently, SEBI had already given the guidelines for investment through the setting up of the alternative investment funds in the IFSC, GIFT City and all, under which we are saying that entities could approach through either AIF or FVCI or FPI or even FDI route. So full flexibility is there. And in case you set up a venture there and want to make investment overseas, further that entity operating out of IFSC makes investment overseas, then they are not limited by for a domestic fund, there's a limitation that only 25% overseas investment is allowed.
Yeah.
So that limitation is not there. Secondly, there is also a restriction that there is a limit up to which a foreign investment could be made, which is all over India. That's about $750 million. So that limit is also not applicable there.
From an IPO market point of view, we have a very, very shallow stock market in the first place, and startups IPOing is unheard of, in spite of the fact that we do have a separate platform where they could list and so on. We haven't seen anything significant happen there. What are some of the best practices perhaps from Japan and other markets that we could look at bringing into India? And do you see movement in that direction at all?
The regulation itself should be a little bit eased. But the one largest obstacle for the startup to be listed in India is they have to make the couple of years consistently making a profit, right? Even like the more than I think 18 unicorns exist in India, but how many of them are actually making a profit, right? And then, but in Japan, once the stock exchange called the Mothers was established, and then the startup ecosystem is like this. And then to list it in Mothers, actually there's no bar on the profit. If the company is growing so fast, and then they can make the profit in the future, and the investors or underwriters can believe in it, they can do the listing in the market. So this type of, it's still, some risk exists for sure, so we have to be careful to formulate such a kind of framework, but something should have been done. And the second thing will be, I think the still capital gain taxes we feel a little too high. So if it's getting low, it can be better for us. And the third thing is I think it's also getting better, but there's some documentation on the investment or even for the exit acquisition happens and the purchase agreement and this stuff. There's so many paperwork and hundreds of pages we need to sign. Like these type of things, if it's eased, it's going to be more simplified. And
from Startup India's Global Venture Capital Summit here in Goa, and I'm in conversation with Andre from Systema Asia Fund. Tell us a little bit, Andre, about this $120 million fund that is India-based. You work out of Bangalore. Tell us about some of the perceptions that you had about investing in India, running a fund in India, and what the ground reality has been.
So, it's a fascinating place, and we are very much impressed with what the government has done recently. Everybody at the conference told that in the last 5 years, the progress is imminent, it's huge. All low-hanging fruits are gone. Now it's in front of us is hard work, just how to change perception of venture capital in the industry, how to persuade the Indian corporates buy startups, unlock the value of startups, unlock the synergy which is startups bring to their through corporate acquisition. So big, interesting work ahead of us.
Tell me a little bit about how easy or difficult it was for you to set up a fund here in India. I believe it's also, there's a counterpart in Singapore.
I mean, like what I can tell, you know, compared to Singapore, it's still difficult. But compared to India 5 years ago, it's black and white. So, but the biggest issue is not like how quickly I open up the fund. The biggest issue is like to bring all the funds, you know, which invest into India back to India, because you know the majority of the funds are based on Singapore and Mauritius, and the reason behind it is very simple, because like to bring money in India and out of India is still a big issue, and capital gain tax is very high. Yeah. So but to change it, you should change completely the tax system, which Mr. Jeffrey will not be very much happy about, to do it right now. And another issue is a liquidity issue. It's a fundamental problem of the venture capital markets. It's here, liquidity exists.
When you talk about liquidity, you mean exits?
Exits, right.
You know, reports that have been out recently, I think a McKinsey report as well as a Bain report that was out, actually showed that the growth in the number of corporate VCs in India has been quite tremendous. But in light of that, you still feel that there isn't enough M&A happening. Can you give us a sense of a sort of global perspective on this?
Liquidity issue is improving, but not like within our expectations. We really want to have more exits. We want to have more profitable exits, and we want to have more useful exits, right? Okay. Which bring value, real value, not only to the LPs of funds, but bring value to the industry and bring value to the society eventually. Are
you looking to have a Systema Asia 2 out of India as well?
Yeah. We say in Russia, there is a bad soldier who doesn't want to be a general, right? Next fund we plan to raise in the end of 2019. Okay. We see a growing interest from the international LPs, you know, to the Indian market, both in Russia, in Europe, in Singapore, in India. In India, we are like trying to bring some different approach, you know, to the
LPs. Are you looking at family offices, Indian family offices investing into Systema Asia? Why not?
Yeah, we do it because they understand that we try to do something differently from the others doing. And we need their support because we are still foreigners.
All right, to conclude this conversation, Andre, we are at the Global Venture Capital Summit. So your three big asks, what are three things that you still want to see done from a policy standpoint to make it easier?
Number one, capital gain tax should be reduced.
Okay.
Number two is SIDBI should more actively help
disperse the funds.
Number three, I mean the government should raise a campaign about the value of startup as industry, right? And help the industrial people, industrial owners, you know, understand how unlock value and synergy through the acquisition of startups.
But the exit momentum in India has picked up as per the Bain and IBCA report released at the summit. Exit value in 2017 stood at $4.2 billion versus $1.3 billion in 2014. In a similar time frame, the number of VCs with investments in India grew from approximately 130 in 2013 to 270 in 2018. Additionally, bigger funds were focusing on later stage deals, while multiple smaller funds are dominant in seed and Series A. We took this conversation up with Priya Ranjan of Silicon Valley Bank, Whirlpool of Capria, and Padmanabh Sinha, chairperson of IVCA and managing partner at the Tata Opportunities Fund.
The trends from before to now, what at least a couple of them we'll talk about here, are that we're seeing in the investors, they're now operators. They've been there, done that, are now doing, are the partners of this top tier firms.
Another trend, and this report speaks of it in some measure, is, you know, a lot more niche funds, early stage funds, small ticket sizes in that sense coming up. Again, perhaps operator run in some cases.
I think it also speaks for the rising spirit of entrepreneurship in India. So everybody wants to be entrepreneurial, whether it's starting off new businesses,
whether it's the entrepreneur or the VC,
or even the VC, which is also entrepreneurial.
I can speak from a global perspective on this. Capria is a fund of funds. We look around all emerging markets, and we see more activity here in India than pretty much anywhere else in terms of excitement in the overall growth of this asset class of venture capital, also early stage private equity. Both are happening.
I just want to come back to you, Will, on that one point about putting money into these emerging funds, right? Most of them might be first-time fund managers, partners even. How do you take a bet?
Yeah, we actually have a name for that. We call it philanthropy. But if you want to do investing, you need to have a local partner.
Right.
And so we're very focused on that. And we've been doing this around the world. We have 19 partners now. And really you have to bring, just like we discussed a moment ago, a startup mentality to the fund manager themselves. That means you make a calculated bet at the GP, help them get started, maybe do some warehousing, and then as they prove themselves, raise some more capital, you invest more capital. And you really help them get going, get the ball rolling.
Okay. We moved up in the ease of business ranking and all of that, but I just want to come to you from the point of view of global venture capital coming to India. What are some of the sort of policy hiccups that still continue to impact the pace of your own expansion here?
Let's talk about an accelerator first. Okay. In India Stack, fantastic thing. Venture capitalists love the fact that there's now a solution that helps solve some of the most fundamental issues to scale, and it's low cost or free, and it really is making a huge difference attracting capital. But things that are still an issue, I think there's questionable knowledge about where is the privacy policy going to go for India. Is it going to be just like Europe? But Europe is way more advanced. So you apply European thinking to the Indian context, it will not be a good outcome in the short term. Long term maybe, but not short term. That's one that makes me nervous.
If I may just add to that, I think from a PVC community perspective, I think if you can bring more funds onshore, there'll be a lot of economic activity around that. That's been an area of focus for IBCA. So we had a great success just earlier this week, maybe a week ago, on the announcement of the AIF operating policies for IFSCs. Now, if you can have an IFSC in the PVC ecosystems of Mumbai, NCR, Delhi, Bangalore, I think that's going to make a tremendous difference because it reduces all the friction costs that come out of operating.
But this is a long-fought battle, right, Barry?
So some of these are long-fought battles. There's also, if you're an onshore manager, there's the friction cost of GST on fund management fees, even when you're managing offshore money, which is effectively export of services and bringing valuable dollars in. It just doesn't bring the dollars in and commits it on a long-term basis to India, but builds a whole lot of economic activity around that.
What are the best practices that you've seen that you think perhaps we are at a stage now that we could import?
Getting really clear on how the pass-through capital gains works and withholding works. That one can be a real issue.
So the management fees that are paid, the GST on that's 18% is a very high friction cost.
For you, from the point of view of venture capital, one high and one low for the industry or for the ecosystem as a whole?
Regulation is still a low. Despite all the progress that we heard from the minister opening here, it's still a challenge. And one of the key problems, if you're in the early stage business, you have to shut down companies as well as start them. In fact, you shut down way more than you exit profitably. And it takes a long time to shut down and to get what remaining assets out of a company. So that remains, again, friction and cost that means you won't make small bets if you think there's a high probability they're going to go down. You just don't bother.
Venture debt has, I know SVB kind of created venture debt in the India market. This was 10, 15 years ago, but now options that the founders have, that just means that now, founders have the say, right, and opportunity to choose from. So that's a plus, but on the negative side, I would say this on a global scale, including India, that I'm noticing, is of course diversity. Diversity and inclusion in terms of both the VC community and also from the founder standpoint.
All right, thank you very much for joining us today. Really appreciate your time.
Thank you.